Back in January 20th of 2022, that's when we submitted this policy. And you can see the policy was signed in January of 2022. You can see it was it's an IUL of $1 million. That's the coverage. Now, so far, as of 27th, what is the date of today? What is today's date? 28th. Today, the 28th of October 2025. So as of yesterday, October 27th, 2025, his cash value, that's how much money he's accumulated in his policy, is $21,000.41. Okay, so far for 2022, 23, 24, 25, 4 years now. Is it 4 years or 3 years? Yeah, about 4 years in his fourth year. So this is the overview, okay? How much he has in his policy value or his cash value so far, how much is accumulated. But we can't just talk about how much is accumulated without looking at how much he's paid into his policy so far, okay? So let's look at this. This is the payment overview, which means this is the total premium he's paid into his policy so far. $28,000 he has paid into his policy from when he got the policy till now. $28,000. Okay, that's the premium he's contributed to his policy. And if we look at the premium paid or the premium paid to date, okay, and I'm going to show you how to calculate this number. Simply put, the cost of his insurance combined over the past 4 years has been $6,030. And I'm going to show you how that number came to pass, okay, or how that number is realized. So far, if I can go back a little bit, he's paid $28,000. He's accumulated $21,000 so far. So because I don't want you to do the math in your head, I took the liberty of breaking it down or doing the math anyway, and we're gonna combine all of that. So let's actually look at what happens to this individual. How much is he paying on a monthly basis, and how is that money actually? How is the back end of an IUL? Okay, because I want us to understand the numbers. So look at this. Let me make sure I can pull up. I can pull up something to write on. So check this out. So every month he contributes how much? If you look at this right here, it says regular premium. You see that? His regular premium is $603 a month. He's 35 years old. His regular premium every single month that you can see the date he paid this, the last time he paid this policy was just the same day, 27th. That was 2 days ago. That was yesterday, actually. That's when he made his most recent payment of $603 a month. Okay. Now I want to show you the breakdown. When he makes a payment of $603, how much actually goes to the cost of his insurance? And you can see those numbers broken down here. Okay. $209 is for the charge, which both of these combined is what we call cost of insurance. Okay, the cost of $1 million basically. So when a client makes a payment of $603, that is not called the cost of insurance. Out of $603, a portion of that money is the cost of his insurance, of insuring his life for $1 million. And if you understand what that actually means, is his net worth is, at least, apart from everything else he owns, like real estate and investments and everything else, his net worth at least starts from $1 million. Because if he was to pass away today or get sick, he's accelerating, or his beneficiaries are getting $1 million. So that's his base. Okay. So that adds to your net worth. So for just, let's say, $220, no, 200 and, okay. How much is this? Let's just say $225. His cost of insurance every month is $225. So we're going to take out $225 from $603 that he's paid into his policy. Then you can see how much is going to his policy value. Now, look at this. So now this is where it gets very exciting. I'm explaining from the top down. Normally I would go from the bottom up, but let me start from the top down. So he makes a premium payment of $603. $225 or thereabout is deducted for the cost of insurance. Okay, $223 actually is deducted for the cost of insurance. Now, guess what? Every month, and I only show you 2 months. This happens every single month. Okay, every month he's making an interest of approximately $180. Approximately. Because $97 in the month of this month, actually, on the 20th of this month, he was credited on one of the indexes, $97, and the other index, $88. Combined, that's about 100 and almost 180, almost $190 thereabout. That's how much interest he's making every month on his in his policy. Same process. So in the last month of September, you can see how much he made, 96 and 97. Okay. That's how much interest he was credited. You can see here it says in excess interest, excess interest. That's how much interest he's making. So when you look at this, it gives you an idea of how the money you pay into your IUL, to be specific. This doesn't apply to whole life. It doesn't apply to term life insurance. Okay, those are different types of life insurances. A term life is very straightforward. You pay a particular premium for a particular death benefit. The only condition is if you pass away in between, the whatever face amount is paid to your beneficiaries. It doesn't benefit you now. You can't accumulate funds. You can benefit from market performance like what we're seeing right here. Okay, so it's very straightforward. Now let me break it down because you're going to meet a lot of people, especially a lot of agents who only deal with term life policies or who are advocates of whole life policies. They're going to criticize an IUL. It's not the best product for you. It's not this, it's not that. And I don't blame them because they don't fully understand how the numbers actually work. They've never taken the time to study an IUL. Most of them just repeat what they've heard, but they've never really taken the time to look at the numbers and really calculate the cost of an actual policy, especially when you start generating interest. Okay. Now I took the liberty of doing that in the next slide. So look at this. This is the breakdown of everything I just talked about. Now, if I started by saying a $1 million policy costs you only $37 and some change, and a 1 million IUL policy can cost you only $37 and some change every month. Would any of you believe me? Tell me, would any of you believe me if I told you that your IUL policy can, I didn't say is, I said can cost only $37 a month and some change? Are you guys going to believe me? Based on what you know so far anyway. Probably not. Probably not. So let's break down the numbers. Let's break down the numbers. Look at this. Look at this right here. Now, remember I showed you what he's paid so far into his policy is $28,000 so far. So far, he's paid $28,000 into his policy. Okay. Secondly, he has accumulated how much? $21,000 so far. He's paid $28,000. He's accumulated $21,000 so far after 4 years. Okay. Thirdly, his policy has only cost him. His policy has cost him so far 26. Oh, sorry. Yeah, his policy has cost him so far $6,030. $6,030. How much the policy has cost him so far, and that is if we add up all the monthly cost of insurance, it's gonna come up to that 60,000. I did all the math. It's gonna come up to $6,030. Okay. Now, next is, so how much does your IUL actually cost you? How much does your insurance actually cost you? If I take into consideration how much he's paying every month, he's paying $603 every month. That's his monthly premium, $603. All right, as we saw from the previous history. Out of $603, I added all the cost of insurance and it's $221. So that's how much is deducted from his $603. The rest is put into his index account. So you notice that the interest credited for just 1 month. I did the calculation for just 1 month. Okay. I did calculations for only 1 month. So you notice that the interest he made in the month of September, this for the month of September, and I can go back so you confirm this number. The month of September he made in terms of interest $183 in interest. Okay, so if you've done at least basic math, you can now figure out how much the policy is actually costing him now, because if you have spent if you spend $221 and you make $183, how much did you actually spend? Who is doing the math? If you subtract $183 from 221, what's the difference? I told you to bring up your calculators. So what is the actual cost of the policy? I'm going to give you a second. $221 minus $133. How much is it? Hello? Someone better have an answer for me. What is the actual cost of the policy? I think everyone can unmute. Or no one is doing the math?
Laura, answer the question.
It's
Who
about
has his calculator out?
$34.
Sorry?
It's about $34.
$34? About or actual?
I think I have
About.
about $38.
$38. Thank you,
Yeah.
Louisa. It's
And some
37 and
change.
some change. Okay?
Yes.
All right. Thank you. 37 and some change. So that is the actual cost of the policy. So because if you're spending, right, if you're being charged 221 and you're earning 133, then you're actually just spending $37 a month. So that answers the question I asked earlier. If I told you that your IUL policy can only cost you $37.82, would you believe me? In the beginning, it's a no, because typically most clients or most people only see this, how much they're paying monthly. They don't look past this. Now, for us, we know better that yes, initially, especially the first year, what you see is only payments. From the second year, you start seeing credit, interest credit, crediting. And from what I showed you guys, if I can go back to the previous slide, if I can come back here, let me put on my eraser so I can take all of this out. Okay. From here, you can clearly see that what you're paying on a monthly basis is right there. What you're being charged is here. And of course, what you're earning is right here. And this is going to continue in perpetuity. It's going to continue until infinity. All right. It just gets better and better and better because the more money accumulates in your cash value, the more interest you're being credited based on market performance, of course. All right. So let me proceed here and show you guys a couple of things. Okay. Now you can take a screenshot of this. Oh, I'm gonna share this actually. Now, what most people don't fully understand is this is what I show you because it's good to look at what I promised you and what you're actually getting and see if what I promised is real. At least one of the providers, I'm not going to mention names, one of the providers, the one I'm showing you right now, is known and is recognized by Forbes and other financial, monitoring houses on one thing, their illustration. What they illustrate is close or more than what you actually get. Most companies would show you big numbers in illustration. They will show you how your money is going to grow fast and all of that, but in over the years you don't see that materializing because they overpromise and underdeliver. We underpromise and overdeliver. Okay. Now I highlighted a couple of years here. This is the exact illustration we did back in 2022. He was 35 years old. Okay. And you noticed anyone with your calculator, if you can do $603 times 12, what is the number? $603 because remember his monthly premium here is $603. So do $603 times 12. What's the number? $603 by 12. What's the amount? What is it? $603 times 12. We gotta be fast, people. Let's do it. Fast, 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 fast.
Yes, I think I have $7,236.
Exactly.
That's,
You see this?
that's right.
That's the exact amount right here.
Mm-hmm.
So when he pays $603, the total for the year is $7,236. Exactly that. So what I showed him is exactly this. That's how much you're going to pay every year. And this is how much it's going to be in your cash value based on a performance of 7.10, everything being equal. Okay. And you notice here, you're not going to access anything for the first 3 years. But in year 4, and we are now in year 4, he's going to pay a total of $28,944. And he's going to have in his policy value $20,926. He's going to pay $28,000. He's going to have $20,000. Now let's go back to the reality of what he actually got. What he actually got is this. So far, he's paid $28,000, but he doesn't have $20,000. He has $21,000. So so his performance is ahead of what I showed him back in 2022. Okay. So far, the market has his policy has performed better than what I showed him. All right, which only means it's going to get better and better and better. So that kind of takes you to the back end of the policy. Now, this is just one aspect of the policy, of course. Everything being equal, I want us to review this policy again in the next 5 years. 5 years from now, it's going to be like 20, like 43 years old. But that is going to be 10 years or 10 years from now. Let me highlight 10 years. It's expected. Excuse me. It's expected that by 10 year, in 10 years, he would have contributed a total of $72,000 into his policy. He would have accumulated $61,000, and he could access $53,000 of that policy. All right, that is just on the cash accumulation angle of it. And 20 years from now, or 20 years in, he would have contributed $144,000. Now look at this. Look at that. He would have contributed $144,000, but he should have in his cash value way more than what he's contributed, because compounding, overtakes your contribution over time, and that happens roughly around year 50. Let me see, year 15 or so. Okay, year 15 or so. Well, based on this, it's going to be almost equal across the line. But you notice over time, what you accumulated is going to supersede what you contribute. So it's expected to follow in that trend. Now you notice that the death benefit is equally increasing, because unlike a whole life policy, with a whole life policy, your death benefit doesn't increase. It stays the same. So your cash value would stay here, but all of this is not added to your death benefit, which means if this individual passed away, only the death benefit is going to pay out. So it was going to remain $1 million. But with an IUL, based on the design we had for him anyway, which is graded, which means his cash value is added to his death benefit. You notice that the death benefit is equally increasing. So if this individual passed away in whatever year, okay, the beneficiary is getting the entire amount plus whatever they've accumulated into the policy. Nothing is staying with the company or with the provider. Okay, so that's one thing to note. Now, this is just one aspect of a policy, because the primary purpose of a life insurance policy is death benefit. It is primarily for death benefit. Okay, legacy transfer. Now, it could serve a double purpose for income replacement, which is where the living benefits come in. Living benefits like critical illness, chronic illness, terminal illness. Okay, because while this individual is still alive, if they were to be diagnosed with any of those conditions, they can leverage the same policy to take care of them while they're still alive. Okay, business owner, parent, individual, whoever. Okay, and then of course we have those living benefits attached to it, the tax withdrawals and loans and everything else. Those are just additions to the policy. But I was just excited to go through this and particularly help him understand how much he's earning in terms of, or what his money is earning him every single month. Because guess what? The same person or the same individual has a lot of money in his savings account. Okay? He opened his savings account and showed me how much he has in his savings account. That's a lot of money. A lot of money. 40 something, almost $50,000 in his savings account. Okay, with US Bank. And guess how much interest he's making on almost $50,000. Can anyone guess how much interest he's making on 49,000 and some change? Anyone? His interest rate with US Bank. Guess what his interest rate is in his savings account? 0.05%. 0.05%. So he showed me the interest he's been making for the past couple of months. The interest is not up to $1. Not up to $1. That's 49,000 and some change. Not up to $1. And then I show him one of his accounts with only $21,000 in there, making him almost $200 every single month. The comparison is like night and day. All right. So that just help you understand that there is your money can do better for you if you understand the different portfolios you can position your money in. All right. I was really excited to just go through this with him, and I just wanted to open up the curtains and kind of show you guys how a policy works in the back end. All right.